Hey traders, and welcome to another episode of Smart Money Trading. Without the skill to identify valid and high-quality order blocks, trading can be extremely risky and may result in significant losses. Order blocks, often overlooked by many, play a pivotal role in executing well-informed trading opportunities and are a cornerstone in the strategies of smart money traders. However, many traders struggle to identify valid and high-quality order blocks, putting their trades at risk. Today, in this advanced episode, we'll dive into various candlestick order block types, trading strategies, and price actions associated with order blocks that you might encounter in the market. But that's not all. We'll also break down the key criteria and rules that elevate an order block to a high probability trade. So, if that's something you're interested in, please give this video a thumbs up to show your support and subscribe to our channel if you are new. See you after the intro. Welcome back, traders. Let's dive deep into the details of order blocks and see the exact definition of an order block. In a bearish scenario, an order block refers to the zone corresponding to the last bullish candle before a sharp and substantial downward movement that generates a valid break of structure. Similarly, in a bullish scenario, it refers to the area corresponding to the last bearish candle before a sharp and substantial upside movement that forms a valid bullish break of structure. Now, let's explore the psychology behind these zones in the market. The theory behind considering these zones as potential reversal areas is based on the belief that they represent manipulation areas formed just before a significant market movement. Traders view these zones as areas where a large number of buy or sell orders have been executed. Therefore, by using these zones in our trading strategy, we can potentially take advantage of the high probability of price reversal and change in direction when it reaches these areas. Next, let's discuss how to identify a valid order block in terms of candlestick patterns and see the various scenarios that we might encounter in identifying candlestick-based order blocks on the chart. In a bullish scenario, a candlestick-based order block refers to the last selling candle before the price starts pushing upward drastically. This candle typically breaks below or effectively sweeps the liquidity of the lowest point of the previous candle. For example, in the bullish diagram, we identify this red candle as a valid order block as it serves as the last bearish candle before the price initiates a drastic upward movement, having taken out the lowest point of the previous bearish candle and effectively swept its liquidity. Similarly, in a bearish scenario, a candlestick-based order block refers to the last buying candle before the price starts pushing down drastically. This candle typically breaks above or effectively sweeps the liquidity of the highest point of the previous candle. Now, let's move into essential criteria and rules that we need to consider to identify valid order blocks in the market and understand how we can use them to our advantage. Firstly, price must take out and sweep the liquidity above or below the previous candle to form a valid order block. Secondly, price must leave inefficiency behind and generate imbalance near the order block area. If there is no proper imbalance between the subsequent candles, then the identified order block cannot be considered valid. Rule number 3 states that order blocks must be unmitigated and are considered one-time use. This means we focus on the trading opportunity when price first enters an order block. Once an order block has been mitigated, we do not consider it as an area of interest for future trading. Rule number 4 emphasizes that a high-quality order block must lead to a break of structure or a change of character in the market. Break of structure and change of character are essential signals that indicate whether the market will continue in its initial direction or will experience a reversal. To solidify our understanding of order blocks, let's examine our examples. Consider a series of bullish candles as illustrated. As you can see, the market momentum was bearish until the price created this weak bullish candle just before starting to push upward with these three large green candles. This weak bullish candle reached its lowest point and effectively took out the lowest point of the previous bearish candle, creating a proper imbalance between the candles, meeting all the criteria for identifying a valid order block. If we look a bit higher, we see another example where the price has created an upward drastic movement. This red candle represents the last bearish candle that had just been formed before the price started to push drastically to the upside. It took out the previous candle's low and created a proper gap between the candles, meeting all the criteria for identifying a valid order block. These concepts are applicable to bearish markets as well. It's important to note that these principles can be applied across various time frames and any price action-based chart. Now, let's proceed to the real chart and integrate all the concepts we've explored in this video. We'll examine how to effectively identify valid order blocks in the market. Here we have a Euro to US dollar 15-minute timeframe chart. As you can see, the market's overall direction is in an uptrend. Upon analyzing the chart, we notice that the price has established a bullish break of structure by breaking and closing above a major high. With the emergence of the break of structure, our focus should now shift to identifying order blocks associated with the bullish break of structure. In conclusion, we have thoroughly covered the major order blocks that frequently appear on real price charts, enabling us to develop a solid understanding of how to identify them. In the following section, we explored the entry models that can be incorporated into our trading plans using order blocks. These entry models serve as effective tools for executing trades based on the insights gained from order block analysis. Remember to backtest your strategies before applying them to your real account and carefully consider the suitability of each entry type within your trading strategy. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We value your feedback and suggestions, so please leave your comments below and let us know what topics you'd like us to cover in our future videos. We appreciate your support and look forward to seeing you in the next episode.